Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's keep going with our euro currency analysis. So in general, as we said, in the weekend, that's overall background and sentiment on the market is bearish, and we suggest that it's more probable downward continuation to the next long-term target that we have on the monthly chart. It's around 105, 104 area gradually, but we are going step by step. And yesterday we talked about the potential retracement that could happen. Actually, it has happened, and mostly it totally confirmed our suggestion that it should be small, and definitely not the reversal pattern, double repo that we discussed, although by the shape it was seemed that this is double repo. That's why it's really great when you could recognize patterns on the chart, but much better when you understand the market mechanics, the mechanics of the pattern, how sentiment change, what should going on with the pattern. And actually this stands in relation not only to the Napoli patterns. It's the same you could say about the double top and head and shoulders, classical patterns, butterflies, and so on. So every pattern has the market mechanics, and when you see the weakness or price behavior that doesn't correspond to normal mechanics of this pattern, it suggests that probably this is not the pattern, or at least it works bad, so not so reliable. Now let's take a look what we could get next in the current moment. First of all, guys, I would like to start from the cross-market analysis, and on the cross-market it's really bad things, I mean for the euro currency, of course. So first of all, here, don't pay attention to this. This is gold market. Take a look at this one. This is 30-year treasury inflation protected bonds, index security. So this is 30-year real yield in the United States, and you can see that it turns positive. Recently it was negative, but here it starts flowing with a positive area, which is works as a bearish factor for all dollar rivals, including the gold, including the currencies. This is what about the real yields. If we'll take a look at the nominal yields, which is the 10-year yield, you could see what's going on here. So our suggestion that based on the technical picture, market should keep going higher. Now you can see it. So 266. So another upward week despite, let's take a look, despite the overbought. On the daily, on the weekly chart, this is weekly chart, guys. On the monthly, you could see the same. On the daily, even more. So, and the fact that the financial market, which is the bond market, stands and struggles with the overbought, this means a lot. So it means that some really significant power stands behind. Speaking about the bonds, since the yields stands in opposite direction to the price, it means that a big amount of the sellers stands on the bond market, and that forces market to drop and push yields higher. Finally, on the dollar index, you can see it's also not favored for euro currency. It shows us unstoppable action and keep going above the top, above the extreme point. While on the euro currency, it just stands right here, so it's just coming to this point. It means that our relation to weekly grabber that we discussed in the weekend as well was correct, and it seems that the grabber has all chances to complete at least minimum target, so euro currency should drop below the extreme point, which is now a case will be these lows. And as you can see, it keep going lower. So on the 4-hour time frame chart, it's nothing to discuss here, guys. Actually, we've got the double repo failure pattern, which is bearish directional pattern. So because with the close above the 3x3, we've got close below again and breaking the major areas. So of this pattern, which suggests that this is failure pattern. Jude Napoli, as you know, teach that it is not only canceling of the direct pattern. This is also separate, isolated directional pattern, but on the opposite direction. So that's why we could say that the double repo failure is also the bearish continuation pattern. So as you can see here, this market was trying to form some pullback, and as we said, taking the position around the first level, placing stop above the confidence, this will be acceptable scenario in our case. The market now is going lower. What we could consider in current situation, well, I do not see a lot of things to do. So if you have taken the short position, just keep it, move stops to the break-even, manage your risk, and so on. The one thing that if we get lucky might happen, although you can see what we have on the corresponding markets on the 10-year yields, the chance is not really big, especially because market already mostly stands around the lows. And on the daily chart, we see that market is not at oversold. So it actually has free space here to drop. But still, if it will happen, I think that maybe we could get something of that sort if something will be realized. So we have some minor diversions here, although I not really believe that this might happen because too few bullish background. We actually do not have patterns, we do not have fib levels, we do not have our sold area, nothing. It makes, in general, this potential setup tricky, but still, let's keep watching. In the current situation, maybe it makes no sense trying to take the long position, but for taking the short position, this is quite suitable thing. So, for instance, if somehow this pattern still will be formed, we will get the bounce somewhere to the 109.50 area, 109.60. That will be great because that should provide us another chance with the position taken. But currently, guys, to be honest, I suggest that it's more chance that market will just keep going lower than starts forming something of this kind. So this what we have currently on the EUR.